Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Steve Wyett, Chief Investment Strategist of Nasdaq-listed BOK Financial. Steve, it's great to see you again. Welcome back to Trade Talks.
Hi, Jill. Thanks for having me back. I appreciate it.
You got it. We do have a lot to cover. There's a lot going on in the market. Let's talk about how well you think the market digested this week's FOMC meeting and Fed Chair Powell's comments on rate hikes and inflation.
Yeah, thank you. Well, better today than yesterday, it would appear, the market from an equity market standpoint. But I think the reality of it is, Jill, this is going to take a while. From our perspective, the Fed's had a really big shift in the tone of their comments around what they're going to do from a monetary policy from where they were just 30 or 60 days ago. So we think it's going to be an interesting period of time as we try to transition from what looked like a pretty patient Fed to now that one looks like they are ready to make fairly dramatic moves on monetary policy over the next 12 months.
Do you think the Fed will initiate 4 rate hikes in 2022, as some economists are suggesting? And if the economy is as strong as it is, shouldn't the economy and the market be able to digest the rate hikes, at least the first 2?
Yeah, that's right. Look, I think the short answer to your question is yes. That's the shift from Fed Chair Powell, is that as he's come out and basically approved what the market has been building over the last few weeks towards more rate hikes, the possibility of quantitative tightening, with the idea that every meeting they're going to be live. They're going to be discussing what they should do, and it does appear that they're now going to approach it from the standpoint of still data dependent, obviously, but it's almost like the data is going to have to show a reason for them not to raise rates as opposed to raise rates, and that's a big shift. The economy should actually absolutely take that. And Joe, when we think about it from a bigger picture standpoint, we're talking about the Fed coming off the zero bound. If they do 4 rate increases or even 5 or 6, we're still talking about interest rates at 1.5% or less. I would hope our economy is not so fragile that we continue to have interest rates that low for us to move forward in a positive manner. You're right.
Do you see inflationary pressures moderating for 2022, regardless of Fed policy?
We do, and that's kind of where, candidly, if you ask us for our viewpoint versus what we've heard Fed Chair Powell communicate yesterday, we're still a little bit more cautious. Look, at the same time that I think the economy can take somewhat higher rates, and I hope that it can, that's a big move for the capital markets. It's probably less of an economic impact. The bigger risk is what that may have in the capital markets, whether that be in the equity markets just from a valuation resetting standpoint, but also the fixed income markets who have where the Fed has been the biggest participant in those markets, and to kind of see how that shift is able to be handled as the buyers of those bonds has to change as we move forward over the course of the year.
And besides the Fed and inflation, investors are focused on the quality of earnings and guidance. What are your thoughts on earnings so far for Q4?
They're fine on Q4. I mean, the reality of it is, though, we're paying just as much attention or more to the outlooks, and that's where we have seen companies become a little bit more cloudy on their outlooks on what, the impact of Omicron in the first quarter. It's there. It's going to have an impact on us. But I think there's just a higher level of uncertainty from an earnings standpoint. We talked about that in a recent asset allocation committee meeting. We haven't downgraded our earnings outlook per se for 2022, but I would say if there's a direction that we're looking, it's probably a little bit lower, not a little bit higher at the present time based upon what the environment is.
And finally, Steve, how should longer term investors be positioned in this type of environment?
I think this is a really important time to remind our investors, and kind of how we approach that and how I would think about it is to make sure that you know what your risk tolerance profile is. Don't let yourself get in a position where you find yourselves offside, where the volatility of the equity markets has an outsized impact on what you're doing from an investment standpoint. And frankly, Jill, the volatility that we've seen in the market is nothing outside the realm of what we've seen in the past and what we could expect even on a go-forward basis. So it never feels good when the market is trading down, but this is not this level of volatility, and even what we're expecting is not outside the realm of what we would expect. And by the way, we still expect stocks to be higher at the end of the year than where we began. So we're still positive on our outlook.
All right, Steve, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.